Can you guys hear me okay? In the back? All right, good. So this is a web-based presentation. So you can go to this link at any point and view it there. It works on mobile devices, tablets, etc. And the talk today is about emerging markets. And we had quite a bit of technical talks today. And now that it's ready for all of us to have a nap, I think we'll talk economics and emerging markets. But no, seriously, I did want to give this talk because even though many of us are programmers, developers, designers, etc., it's good to just be aware of where mobile is really starting to make huge gains across this global app sphere, so to speak. So, but the obligatory self-promotion slide. My name is Joe McCann. You can follow me on Twitter. Same handle on GitHub. A lot of open source projects there. I'm a partner at the Node Firm, which is a Node.js-based consultancy. I blog not very often, sadly, on subprint.com. And in my real life, when I'm a grown-up, I'm a mobile architect at Bizarre Voice, a software company in Austin, Texas. I also created a couple projects, PhotoPipe and Dillinger, and I'm a big fan of open source software. And I did want to take just a quick moment to recognize PhoneGap because I saw this project in 2009 in DC when Brian gave the talk at JSConf and was really sort of blown away by it. And to see this sort of global community come together for PhoneGap is pretty impressive. So I'd say let's give it a hand, right? Okay, on to the boring stuff. So I want to start off to have everybody sort of ask yourself a question, and seriously ask yourself a question: where do you think that the next 10 million apps will actually come from? And I don't mean that geographically, like where will they end up going? More like think about it that way. Right now, of all app downloads worldwide. The United States gets about 41%. The EU another third, Asia about a quarter. But what's really weird is that everybody else is about 3%. Sorry. Right, so there are three things that actually determine app demand in each one of these particular locations. One of them being obviously increased smartphone adoption. You can't actually have apps without people using smartphones. And then with that becomes actually users understanding how to use their smartphones, so actually engaging more with the phone itself, understanding how to connect to Wi-Fi, understanding how to turn on geolocation, how to use apps, how to play games, these sorts of things. But in addition to that, one of the biggest things is finding out what the TAM is in each one of these countries. And what that is it's not necessarily the entire population, but in this instance, it's what's the total addressable market of actual smartphone users in that country. So, while currently in Western markets, developed markets like the EU, the United States, those factors determine a lot of where apps are going and the demand for them. But there's been some talk around the BRIC markets actually having way bigger impact as far as app demand is concerned. So for those of you who may not know what BRIC actually means. Back about 11 years ago, there's a guy that works at Goldman Sachs, this guy Jim O'Neill. I think he's the chief economist still to this day. He coined this phrase BRIC, and what it means is it stands for four countries that are considered emerging markets. First one being Brazil, Russia, India, and finally China. You may or may not have heard a little bit about their economies over the past 11 years, but if you've heard anything, you're probably recognizing that they're doing extremely well. So what does the opportunity look like in the BRIC region, so to speak? Well, this horribly huge image of Smartphone penetration per mobile subscriber per country has Brazil, Russia, China, and India last. And this is data from the end of 2011. So take, for example, India. They have about 1 billion-ish people in India and about 3% smartphone penetration per mobile subscriber. I want you to keep that in mind as we continue to go through and talk about each one of these countries individually. So first up, Brazil. Oh, and by the way, I did want to point this out. Because this isn't a lot, there's no code in any of this, there's no, I'm not doing live demos or anything. There is an Easter egg hidden in this deck. So if you feel compelled now or later to search for it, I'm still keeping it geeky up here, don't worry. So first off, Brazil. Over the past 9 years, Brazil has had an explosion in their middle class. 40 million Brazilians are now in what they constitute as the middle class in Brazil, just in the past 9 years, which is very impressive. What's even more impressive, though, is that now nearly 3/4 of all Brazilians are either in the middle class or better. And what that's led to is more discretionary income, able to purchase more goods, these sorts of things. And for a lot of Brazilians, when they've moved up into a new social class like this, they've never used a personal computer in the past. And it turns out that their first computer was actually a smartphone. So they're interacting with, say, the web for the first time or applications and whatnot on a flat screen as opposed to a QWERTY keyboard. I mean, it's really compelling to think about that. People have never used computers, but a phone is their first one. So if you look at Brazil on this chart again, there is a pretty significant opportunity for growth if you think about the rise in middle class, the rise in discretionary income, and how much further along they can actually go. Now, in addition to this, Brazil has had a significant amount of investment for things like the World Cup that's coming up. I think they have the Olympics as well coming up. So they have runway to continue to grow, I see, at least for the next 8 to 10 years. Now, Russia's an interesting place as well as far as how they've come about coming into an expansion in middle class. So if you look at city dwellers, folks living in the large cities in Russia, like Moscow, St. Petersburg, et cetera, 40% of them are now in the middle class. And that, if you think about it, that 40% plus people that are in, say, upper class, more than half of these people now are in the consumer space where they can actually spend a lot more money than things on food and the staples, so to speak. And what's shocking about this is that just in the past 12 years, their spending on luxury goods has gone up an astounding 11x. It's just baffling to me how a country just 12 years ago, people were not really buying discretionary items, and here they are buying luxury goods at an 11x multiple. Now, what spurred this sort of growth? Well, this is a chart it's an index comprised of the simple average of the dated Brent, West Texas Intermediate, and Dubai Fatah spot crude oil prices. So the price of oil is actually directly correlated to how successful Russia's economy is. If the price of oil is roughly above $75, $80 a barrel in Russia, things are great. If it goes below that, things are not so great. And if you look at just these past 12 years, things have been looking pretty good for Russia. If you look at monetary policy, particularly the ECB and the Federal Reserve of the United States, they are producing basically a hyperinflationary market, and that's going to continue to prop up inflationary commodities like gold and oil. So Russia has also quite a bit of runway going forward. So look at the chart again. They're right below Brazil. Again, in my opinion, a massive opportunity in a place like Russia. $500 million people in the middle class in India by 2025. There were 50 million people in the middle class in 2005. That's an absolutely mind-blowing statistic, in my opinion, where you can have that much mobility in class in just a short amount of time. And this has been sanctioned by the US Department of State. This is not some investment bank or some consultancy. the United States federal government figured out or estimated that about 500 million people in India will be in the middle class or better. What's really compelling about India is that more than even the UK or the United States, they're very much a consumer shopping-oriented culture. I did not know this, but TGI India ran a study, found out about 54% of Indians that are in the middle class or better just like to shop. They go out and they shop, they buy things. And it turns out that the highest percentage of people that actually own mobile phones are in the middle class. So India's dead last on this list. They have about 3%. 500 million people in the middle class, largest mobile phone ownership in the middle class, and 97% of runway to go. Last but not least, the sleeping dragon of China. Take what your income is right now. I know, each one of you, €1 million a year. Double that. Now double that. That's what happened in China, literally, not the €1 million, but the income over the past 10 years. Incomes have actually quadrupled. And what blows my mind as well is that the middle class currently in China is already bigger than all of the United States. And by, I think, 2025, 800 million people in the middle class. Now, China is a country that's unique in the way that they handle not only internal policy, but monetary policy, trade. And China has a significant amount of runway, in my opinion, as well. In the past 2.5 years, they just put $101 billion in investments in Africa. Why Africa? Well, China is consuming commodities at such a voracious rate that they need to actually go to many other places to be able to get things like iron ore and oil and these sorts of things. So China also, in my opinion, lots of runway to go there. China was second to last, roughly about 6%, another gigantic, massive opportunity. So, that's great. You guys see the opportunity, I hope, in the brick markets, but how do you actually end up getting there? What does this have to do with mobile? What does this have to do with phone, right? Well, buzzword friendly here, mobile and cloud can actually act like the wedge into these emerging markets. I know it sounds really cheesy, but it's actually, if you think about it, it's actually true, and it's actually, probably already happening today. If you think about it, you don't actually, traditionally, if you wanted to scale into emerging markets, you actually had to go open up a shop with boots on the ground, and there's a lot of overhead bureaucracy, there's the cultural differences, there's language barriers, there's time zone changes, there's all these sorts of things. And what's interesting now is you can actually now reach out to consumers and users, leveraging things like the cloud, and reach them in a localized fashion because you've got, say, hopefully a smart enough engineering team in Amsterdam or in San Francisco or wherever your team may be. They don't actually have to be in Bangalore to serve Indian customers. And this is, in fact, happening today. Loads of apps, games, etc., are already in these other countries, these other markets. I know what you're saying. This is great. You've talked about all these emerging markets, and it's awesome, middle class, this and that. Well, I did pull some data at about 2 a.m. this morning. So this is very, very recent data on how this actually relates to PhoneGap and why I think that there's some seriously impressive stuff to talk about there. So if you look at PhoneGap's growth from this point last year to 2 a.m. this morning, roughly, well, I'll just let the numbers speak for themselves. Now, I will say, China wasn't even in the top 10 last year. So the growth there is huge. This 922% gain is just astonishing to me. And even India being number 2, they've moved up consistently over the past couple years. Now, PhoneGap is still a relatively young product, if you will. But to see this sort of growth with the BRIC nations, to me, is a super compelling answer to where will these next 10 million apps potentially come from? Or more importantly, where will they actually be going, and not necessarily where the origin of the developers are? Where will these apps actually be surfacing from and actually serving? And I think the data supports, at least from PhoneGap's perspective, where a lot of it's actually headed. So I'll leave you with one last thought. We're all right on time? Cool. So as I've sort of beaten into your head at this point, over a decade ago, BRIC nations saw a lot of capital deployed to them. And the return on those investments have not only been seen by the people that have invested in those countries, but you've seen things like social mobility in class, improved education, improved discretionary income, these sorts of things. However, in 2012, there is a new BRIC. Anybody want to take a guess? No, this is English. Close. That's right. Thanks, guys.
That was pretty interesting. So yeah, translation, pretty important. Globalization's in our roadmap. Do we have any questions for Joe? Oh, we definitely do. Okay.
Can you compare the downloads for the USA and Western Europe in the figures you showed? Because I suppose there's also a growth in downloads from PhoneGap from the USA and Western Europe. How are those figures over the last year?
That's a great question. So there was significant growth in all markets, but the ones that stood out the most were BRIC nations and actually some of the missed nations. So the United States still saw, I think, about a 250% growth, but they were always number one, and they always had this massive amount of downloads as it was. So I mean, if you look at it as that sort of the benchmark, these still were much more impressive to me.
Yeah, we were looking at we're always looking at like our downloads and where they're coming from, and then like I think it was about 6 months ago, China cracked top 10, and we're like, oh, look at that, China's growing, and then it went to like number 2 in like a month after that, and it's like, what the hell is going on in China?
Yes.
Do we have more questions? Oh yeah.
I think it would be interesting to know what kind of apps are being created in these BRIC nations, because their culture is different from the Western world, I guess.
Yeah, it's a great point. I don't have any way of measuring this, but my opinion is that the types of apps that will be successful are hyper-localized and culturally relevant to those particular markets. So if you're going to spin up an app for, say, Brazil, you should probably know a significant amount about the culture there and Portuguese at a minimum, that sort of thing, right? Sadly, there's no real way to measure this sort of thing right now. Not that I'm aware of.
Question right here.
Question about the BRIC nations. Do you find, though, that the actual infrastructure will not actually mean that they'll be able to grow in these rates? An example would be Ireland. In 10 years, they actually went through 7 times a growth in consumer spending. Yet in 2009, 30% of the people that owned smartphones could not get a signal in their house that could carry data. So the numbers are great, and the runway is huge, but if the infrastructure isn't there, then you're not going to see that growth. Have you looked into numbers like that, where people have money to spend, but the infrastructure will not be there for a decade?
Yeah, I mean, that's a really good point. I would counter that with saying that I live in the United States and I use AT&T and my phone doesn't work in downtown Austin, Texas. So, I mean, I get your point completely, but the reality is that these markets are going to start to adopt smartphones regardless of if the infrastructure can actually support it. And in addition to that, it provides a market opportunity to infrastructure providers.
Okay, thank you.
What?
He said, "Where's Easter egg?"
So you guys want to know the Easter egg? I wish I could probably show it. So while I was putting this deck together, and I'll wrap it up after this, I was looking at like the Brazil, Russia, India, China, and I was reminding myself, where have I heard Brazil, India, China? Street Fighter 2. That's right. I was keeping it geeky. I told you. So if you go, I haven't figured out how to do it just yet on touchscreen devices. But if you're on a laptop and you type BRIC, you'll notice something different in the deck. That's all I'm going to say. And with that, thanks, guys.
Thanks, Joe.